Hi everyone, and thanks for checking out my channel. I'm going to have a look at natural gas tonight. Didn't check for quite some time, as I was a little bit waiting for some proper setup for opening short. I got some also long opportunities along the way, but that's always short-lived at the moment. And at the moment, I think because we are reaching end of October, early November, and we're very similar to what happened last year, just want to try to get some comparison and see what we could have ahead of us and start making plan to trade it. So if you remember, and you've been trading natural gas last year, at the same time we got that island reversal just right here that happened roughly early November, so pretty much the same time. We had a solid move to the upside on natural gas. The thing was driven mainly by tropical storms, but it was quite solid, and it went roughly from 2.2 up to 2.9 with almost no contango involved. So we had a little bit of contango at the beginning of the move that did trigger the move to the upside, but everything else was just pure and complete buying pressure. A very different picture we have this year. As we can see, we reached $3 at the top, so slightly higher, but we had a massive gap here, of course, here. So that went from 2.1 and did move up to 2.75, got the sell-off, then a move to the upside, but basically the price didn't actually move so much if we just take the contango off, which is a very different picture of what we got last year, and doesn't actually show that the buyers are actually there, but instead that we're having, because of the contango, huge expectation on natural gas to actually perform and having a price above $3 for December and of course January and February. Now if we look at the setup from a technical point of view, very interesting as well. We got the divergence despite the massive jump of the contango here on the daily chart. That's a very negative thing. If we look similar last year, we had similar divergence on the daily chart that did actually trigger a huge sell-off down to 1.55. So I believe at that point, of course I'm not going to hold short during winter all the time, that would be very risky, but that's the strategy on my side. There's no reason to change it, despite all the narratives about the production falling and that we're going to squeeze the surplus and everything like this. I just don't believe it shows on the chart yet, so my strategy will be to keep shorting spikes, and that's exactly what I'm gonna do at least for the coming week or two. So if we look now a bit closer, so the 4 hours we have in that rising wedge, we're going to open the new contract. Did actually roll over already on investing.com, but that's gonna show until Wednesday some selling pressure probably, but we're gonna go to 3.17. If we look at the divergence currently in place, the bearish one on the 4 hours, we are going to open very close. So we got a first touch on that divergence here, and we are going to have another one very close here. So what I'll be looking at for next week will be some maybe move to the upside just slightly, as we got some cold weather in the western and northern of the US that will actually put some pressure a little bit on the price. So I believe maybe could see 3.2, 3.25 potentially, and if we make another touch on that trend line here, then with a proper rejection pattern here, would be a very neat short entry point to at least go and trade back to 2.9 and potentially see the wedge breaking down, as 2.4 would be the next target, and of course we're still having down below 2.1 as being the gap filling from the previous contract. Are we going to fill it? No, it's really hard to tell, of course, and maybe we won't, but this is still a possibility. And if you're planning to open long and hold it during winter natural gas, I think that's an extremely bad idea for many reasons, but because the price is too high at the moment, but also the downside risk is huge, and we know with the contango it can basically just wipe an account very quickly. In a couple of months can be gone. So if we look now on the quote report and see what the positioning is for the fund, so that one 13, I think, went up to the 20s, so there was roughly a move to the upside. We could see from the managed money is still adding a long position, mainly short covering a little bit, reducing their exposure there, and we can see the swap dealers, they were also reducing their short exposure, so that's a little bit bearish, but we don't have anything significant. The open interest dropped during that time, so that's bearish, but there's no actual strong signal that actually calling for a major switch in terms of the fund strategy. Now that's bringing me to a very important point, I think, that's been also missed by many analysts that are looking at natural gas. If we compare with last year, so that's the island reversal, we got at 2.9, we got very almost they were actually negative long, and of course net short on natural gas for the fund, which means that the potential selling pressure was actually much lower since they didn't have that many long contracts to actually sell off. Now if we look at the price here, roughly $3 almost, we can see that the managed money did actually stretch their position almost to record. They did actually stretch it once above 200k net long contracts, but now they are really approaching that level, sitting very close to 200k. I think from a technical point of view, that's extremely risky to hold against that position, because should they actually start reversing, let's say the weather is disappointing, we don't get the cold expecting or expected earlier, all these future contracts will actually take a massive hit, and they will actually offload their contract really quickly. I think at the moment the best thing to do is, of course, thinking about going long. Should we get some proper buy signal and the right level, because during winter we'll get some spikes, we'll get some speculation around cold weather, but with La Nina expecting to actually bring very cold weather north and west part of the US, but the rest of the country should be relatively mild or even above average temperature. That's the high density population. So if that cold doesn't actually move into these areas, then we are up, I believe, for something very similar to what we got last year, which was just basically from the top and during the entire winter move to the downside, very powerful. We could almost just rely on some moving average on the daily and on the 4 hours chart and just set sell points all of the time. It did actually spike. Are we going to get the same thing this year? Of course, I have no idea, but that's definitely a possibility, and I'd be extremely careful not accumulating long at that level. I think it is way too risky at the moment, but instead waiting for better level. 2.4 I think to me is the bare minimum on the next contract on December to enter an open long position, but 2.1 of course, and that trend line here would be much safer. So yeah, that's all for natural gas. If you have any question, any comments, just please let me know. If you disagree, if you have another view, I'd be happy to hear what you're saying. Of course, I will not get stubborn on my analysis. If there's a switch, if I see some major breakthrough, and if, of course, we see the price building up and preparing for some breakouts that will actually change everything and challenge much higher levels, such as $4, we'll switch my approach, of course, and go long. But for now, I will short any spikes, accumulate short near the between 3.2 3.3 potentially area, and trade that way, waiting for better level to open long. So thanks for watching my video, and I hope to see you around, and I speak to you soon. Cheers, bye.